moving on to our last presenter of the day, we have D3 Energy Limited. D3 Energy is trading under the ASX code D3E with a market cap of approximately 20 million. D3 Energy recently listed on the ASX and owns African-based assets which are prospective for the exploration and production of both natural gas and helium. The company's primary focus is on its natural gas and helium assets located in the Free State Province, onshore South Africa, where the company's exploration work has identified an exciting natural gas and helium opportunity and where a significant contingent and prospective resource has been delineated. Presenting for the company today is Managing Director and CEO, David Casey. David, welcome to the network and please take it away.
Look, thanks, Manny. And I think after that introduction, I don't think I need to do any more. So mic drop, I'm out of here. No, look, appreciate the introduction. Once again, thanks for those that are still on the webinar. I appreciate your time. We just push through, I suppose, the obligatory disclaimer slides, guys, and competent person statement. The competent person statement does have some relevancy here. Not necessarily for now, but I'll talk to it later in the presentation. So let's go to kick off with the corporate snapshot slide. I lead off with this slide because we're sort of new and shiny. I mean, we listed just recently on the 13th of May, and some of these numbers are a little bit outdated. So we've only been on the board for a little bit over 2 weeks. We raised $10 million at 20 cents, got a market cap at listing of 24.2. Today we're at 18 cents, so I think a fantastic buying opportunity. Day 1 and 2, we hit 23 and 25.5 cents respectively. We've come off on the back of not unexpected selling, I suppose. Hopefully the presentation gives you a sense of why we're undervalued at the current price. Board and management speak for about 17.5% or thereabouts, and the top 20 is about 65.5% of the issued capital. Next slide, please, guys. Just looking at the assets, and Manny gave you a bit of background here. We are in the Free State of South Africa, so depending on how fast you drive, we're either 2.5 to 3 hours south of Joburg. This is a historical gold mining province, and it's that gold mining heritage that's actually given rise to why we're essentially there, and hopefully I'll elaborate on that in the presentation. We've got about 440,000 acres. We've got 4 permit areas. The focus of this presentation, which I'll talk to a bit later, is ER315. As you look at this map on the right, it's the far eastern or right on this map extension of the green grey areas. Worth noting that when I talk to our contingent resources later in the presentation, it only refers to 315. As Manny alluded to, it's prospective for both natural gas, which is methane in our case, and helium. We're here because, as I alluded to, the historical work that's been done. There are boreholes in and around where we are, actually in and around just about all of the area that you can see in front of you here, that are emitting various rates and ratios of helium and methane. And in our case, and particularly in the area that we're currently looking at rates that are, well, 1, significant, and 2, absolutely measurable. And to the point where we have been able to take samples, and we're looking at helium concentrations. These numbers won't mean much to you at the moment. Hopefully at the back end of the presentation, they'll have some context. Averaging over 4%, but as high as 9% where we are. The other component is methane. You'll hear a lot of companies talk about green helium, and nothing wrong with green helium, but the associated gas with green helium is nitrogen. Nitrogen, today there is no value for nitrogen. Our carrier or associated gas is methane, and in energy-starved South Africa, there's absolute value when you've got 85 to 90% of the other associated gas over and above helium being methane. And we're also looking at a really good neighbourhood. If you look at the gold area there, that's ASX-listed Renogen. Renogen, actually, as it sits today, has an operational cryogenic and an LNG plant about 20 kilometres to the west of us. Kudos to Renogen, having done what they've done in the timeframes and with all the issue around COVID. not an insignificant achievement. I think hopefully at the end of the presentation you'll get the sense that we're not exploration. There are areas that we will explore here, but today we're not exploration. We consider ourselves an appraisal company. Next slide, please, guys. So first of all, helium, what's it used for? And I'm the first to acknowledge that I've only been looking at the helium space for probably the last 4 years. But turns out maybe the question should be, what isn't it used for? 100 years ago, almost nothing. But today, almost everything that we use. It is literally a critical 21st century resource. It's regarded in many countries as a critical mineral. Anything that's got a chip, so your phone, your car, your TV, anything absolutely requires helium for its manufacturing processes. Next slide, please. So as a consequence of the changing dynamic around the helium space, we've reached the point where and it is a classic case, as I say here, of demand outstripping supply. So as things stand at the moment, and these are projected growth rates, demand is projected to outstrip supply by a factor of 2 to 1. So numbers are modest when you look at the demand growth from 6 BCF to 8 BCF. Again, it's modest in terms of what the volumes would be in a conventional oil and gas context. But nonetheless, the growth profile has basically put us in the position, next slide, please, where over the last 5 years, we've seen helium prices increase by about 18% per annum. Going back further, you can see on these graphs, 2001 it was circa about $70 US, by the way, US and MCF. And today you're probably, and these are long-term contracts, by the way, these are not spot gas prices, long-term, around $500. And projection, even on a 10-year compound annual growth rate, you're looking at prices long-term again of $800. To put that in context, natural gas on the east coast of Australia, which is predominantly methane, is about $12 an MCF. So, yeah, and by the way, these growth projections take into account all of the potential supplies coming into the market, such as us, for instance, and others. And if you look at maybe even just a 15% annual compound growth rate, you're looking at $800 plus bucks. You're looking at $1,000. And if you look at that, that's in line with current spot prices, which are $1,000, and from a military perspective, $2,500 per MCF. So you can see why we're starting to chase helium in this province. Next slide, please. So looking at ER315 in particular, remember it's the one around the edges here. You'll see a lot of companies and juniors in our space. And I said, we're very new and shiny, we get that, but we have been working on this for a while. You look at a lot of the other juniors in this space, and they'll talk helium concentrations, as they should. This bar graph is trying to put that in context. We're not talking about helium concentrations in general. We're being specific about helium concentrations of producing fields. And the gold bar there is the Virginia gas field, which is Renergens. It's an average of 3. It's actually probably higher than that. I've just taken, and ACAP have taken just some of the published data that's out there. I do know we have, and as you can see here on the map to the right, we have North Dark and Wadskamp, we have helium concentrations of 9%. At Bloomscrub, which is where we're currently drilling, we have helium concentrations of 6%. I know Renergen have helium concentrations as high as that. But looking at the average, you look at that graph, you can see how the Virginia gas field and consequently by implication D3 stands out. Interesting, if you look at Qatar there at 0.04%, it doesn't even get a bar. The bar doesn't even get off the canvas, so to speak. Yet Qatar is the biggest producer of helium in the world as a byproduct of the natural gas that they produce. I would imagine with their percentages, they probably do, out of the 6 BCF today, they're probably doing 2.5-ish. So it's a function of volume. In our case, it's a function of the cost to get the molecule to the surface and the cost that we ultimately get and the percentage concentration of helium, which I'll talk to. Next slide, please. So looking at independent certified resource, and look, and before I go into this, I probably should point out that I think D3 is one of the very few, and definitely the only company in recent memory that has come to the boards and been listed with a drilling, and I'll talk to the next couple of slides, a completed drilling program, an independently certified contingent resource, a material contingent resource, not a prospective resource, but a contingent resource, and producing well from its first drilling campaign. Looking at the numbers in themselves, it's about 475 BCF or thereabouts of, sorry for the numbers of the nomenclature. It's close enough to a petajoule if you want to talk about crossovers, but 475 Bs of methane. You've got about 23.4 BCF of helium. Just think about if you're getting $1,000 per MCF, what that may mean. So in and of itself, not an insignificant resource, and particularly the methane, when you're looking at where we are in South Africa, almost 500 billion cubic feet of methane. And importantly, we're about on par with where Renogen was at its particular point, or its history and development at the same period of time. Next slide, please, guys. So I suppose if there's a money slide, it's probably this one. So this is the drilling program. So, and it's going to be hard to talk to this without a pointer. But so if we look at this, and I apologise for this, guys. If you look at this, you look at RBD 10 it's the red star to the north, and you look at the dashed yellow black line, which is the Virginia Fault, and you look at RBD 11. The two wells that we just recently drilled and completed. And once again, very rare to have a drilling program, contingent resources and production in you before you've even essentially hit the boards. But RBD 10 was drilled on the hanging wall side of the fault, RBD 11 on the footwall side of the fault, because based on the data that we had from these historical boreholes all around us, it appeared that it was the diorite hills on the hanging wall side with the fractures. And by the way, our helium and methane come from methane's biogenic, and the helium's obviously radioactive decay coming from deep-seated faults all the way to the surface. But that helium was being accumulated on the hanging wall side. So that's why we drilled either side, and we got exactly the result we expected. Notwithstanding that RBD 11 didn't flow at rates that were commercial, RBD 10 did, as evidenced here. Notwithstanding that it didn't, we still got enough gas to collect a sample, and that sample still had world class. And once again, Qatar, 0.04. The next biggest producer is Russia, 0.3. We're at 5 and 5.1%, and even in RBD 11, 5.1%. So we're at a good location. We've got historical blowers that support the model. And so at the end of the day, and I know you want to wind me up, but the last slide is the money slide. If you can, so Novo Energy, and I probably should have mentioned this at the start, guys. Our biggest shareholder is a company called Novo Energy. Novo were our partners in the project. When we listed, they acquired stock in the company as opposed, and we acquired 100%. That's our early monetization strategy. That tube trailer there is how we commercialize the gas in the first instance, even without taking the helium out. We sell gas through our local partner, early access to market. Ultimately, that creates an avenue to book or convert our resource to reserves. Appreciate your time, guys.
David, thank you very much. So just to kickstart a little bit of Q&A, is it fair to say that the helium opportunity here is significant in a global context? So you're basically saying the concentrations you are getting, and again, you do have a neighbour, Renogen, so they've had similar experiences, but the concentrations you are getting in helium here are world class. Is that fair?
Absolutely world class. As I said, you look at the best project, the best producing project in the world today, and there are lots of higher helium concentrations, but the best producing project is at 5%, and our average is over 4%. The other thing that I think is worth noting is we're not appraisal. We're hoping to drill RBD 12 on the back of the results that I just highlighted, RBD12 will be in between the legacy boreholes and 10. It will confirm the geological model, and then it'll allow us to do some production testing, longer term production testing. It's that production testing that I think that defines us or distinguishes us from our peers. We are looking now as to how we commercialize this, not where is the gas and not where do we go to find it. We know where it is. It's what's the logical next step in the commercialization process, and hopefully that gets resolved in the next 6 to 8 weeks when we drill, and maybe even sooner, RBD12.
Okay, so we can expect, and investors and shareholders can expect to see results in the next 6 to 8 weeks.
Yeah, so as we've learned from RBD10 to the north, look, if we're on the right side of the fault and the geological model is correct, we will know pretty quickly. These are the cheapest wells that I've ever been involved in. I've been doing this for 30 years. Eastern Star Gas, we grew it from a market cap of 26 million to be a ASX 200 listed company around $1 billion. This is the best walk-up start I've ever been involved in because we know the gas is there, we know the compositions. This is the cheapest. I'm almost embarrassed to say, Manny, that these are wells. They are that cheap to drill, and the capex as a consequence, and the opex, more importantly, is that low. When you know you've got wells, and by the way, those legacy wells, they've been producing since 1984, and probably been producing at rates that we're talking about in RBD10 the last 30, 40 years.
All right, and okay, so once we get confirmation of this, and it certainly seems like it will, what's the next step then in terms of the development?
Yeah, so and I didn't get to the next 12 months slide, but if you look at the next 12 months, obviously there's RBD10, there's a whole bunch of testing, but there's also some seismic to refine the model. But if we do that, then all things going to plan, we're looking at another 5 to 10 wells, definitely 10 wells over the next 2 years, but 5 wells in the next 12 months to start to really expand upon our resource base. As I said, remember, the resource base is only for 315. There's 3 other permits that we are yet to get resources over. And if we can sign an offtake with Novo, a lot of the resource that's in 315 will convert to a reserve.
Okay, and one more question before you go. Again, moving to your neighbour, Renogen, they've got a facility now which is up and running. Is that possibly an advantage for you? Is there possibility there that you might be able to do something with Renogen in terms of your own resource?
Oh, it's fantastic having Renogen there. Whether we come to terms on any agreement or otherwise going forward, I mean, we're all rowing in the same direction. We're all looking to deliver into a market that actually needs our gas. The methane, I mean, forget the helium, and you could argue that's gravy, but the methane alone, South Africa currently needs about, I think today, 450 to 500 BCF or petajoules, and it's got about 190. So for both companies, the market's there. I think we can learn from each other. I think we've taken different approaches to how we've got to where we are today. But having Renogen there with a cry, look, I get there's been some market pushback against some delays with the plant for Renogen, but all things being equal, Manny, if you look at what they did, you look at the fact that they were through COVID, building it's a pilot, I get that, but building a pilot cryogenic plant for gas, as in LNG, and for helium, pretty significant undertaking, and kudos to them. So absolutely, I think there's ways we can work together.
Okay, well, David, that was great. Sounds exciting, and hopefully we'll get an update from you on progress soon. But until then, have a great weekend, and thanks for your time today, Dave.
Yeah, appreciate your time, mate.